Yo, what's up, StockTwits crew? Good morning and happy Wednesday. It's a big day, y'all. It's Nvidia Day. It's going to be a wild one. We had a ton of earnings last night. We got, obviously, Nvidia earnings later today. We had some pre-market earnings. We got data coming out today. It's going to be a big day, so buckle up. I hope everybody's ready for it. How we feeling, boys? Shy, Daniel. It's a big day ahead of us. How we feeling about it?
I'm gonna let Daniel speak on that one
Happy,
first.
happy, happy Nvidia day, week, month, whatever it's come down to. It's this week it's just insane. You see those graphics, guys, on the like that show like Nvidia like holding the ball of the world on its back right now. Like after the last 5 days of Armageddon in the markets, at least for those of us in growth, I'm sure Shai, your growth portfolio is taking a whack. Um, it just feels like anything less than amazing today is just going to absolutely send this from kind of bad to worse.
Yeah, I'm with you there. Shy, we kind of
Yeah,
feeling the same there.
I mean, I kind of love the setup though we have entering this
There it
print
is.
because,
Yeah, there it is.
yeah,
It's not just the U.S. economy, by the way. I think it's like the world economy. I mean, I think we're underestimating that.
but yeah, I mean, it's crazy. I feels like it's a night, not it's a recurring dream we have every quarter. Where like we need Nvidia to save the day with our earnings report. It just happens every 3 months, and what has occurred every single 3 months? They've delivered. So I will say, caveat: this is probably the noisiest quarter that Nvidia is going to experience, and probably since the end of 2022. And I think they're going to deliver. I think they're going to calm all the DeepSeek fears, all the capex noise. Gross margins are going to look like they're still in the mid 70%. They're not losing anything there. China's going to be an interesting commentary on there, but I think it's going to be fine.
I I I hope you're right. I tend to be very bullish. If you kind of look at my sentiment around the web, I keep saying up and to the right. That's the
Mhm.
long tail. If you're an investor in Nvidia, just sit, wait. You'll be happy that you didn't do anything. But it's really funny because like in the market channel checks, I talk to tons of CEOs of these big tech companies. Part of my gig. Um, the sentiment's weird. Like if you're in tech, like you're feeling a lot of optimism, but like when you kind of look at like the tea leaves, the internet, the web, like I've never seen over the last 8 quarters so much kind of negativity, so much FUD right now about what's going on. It just feels different, the setup. And of course, like I said, 5 days, and I'll raise my hand. I said this backstage. Anyone else lose 7 figures of paper gains in the last 5 days? I'm like, I did. Got crushed. And by the way, everybody out there, you'll come back stronger. Keep buying, keep investing in great companies. But it is different, guys. The sentiment out there is different. I'm hearing analysts that have been pretty bullish for a long time, kind of turning a corner. I'll also say, like, the media, the mainstream, a lot of the media have gotten so much wrong. They got DeepSeek wrong. The TD
Mhm.
Cowen thing was wrong. All
Mhm.
these things are a demand setup. They're not a demand destroyer, and I can't understand why they keep reporting. I keep hearing about DeepSeek. Did it change? It's like, yeah, it created an environment for more demand. That's what it
Yeah,
created. That's it.
100%.
Exactly. Yep.
D-
100% with
I
you.
mean, do you think it's because I don't know. I think it's not manipulated, but like I think they're looking for reasons to take it down a bit, and that could be because I don't know. There's a ton of money on the sidelines that they want to participate even more, or uh, it just feels orchestrated. Everything that's happening in the media, where like you and myself, like we saw this like DeepSeek, it was BS. That was like that's the complete opposite. It's making fuel for AI even cheaper. There's gonna be a ton more AI demand,
I went
but
on. I was on CNBC last night. I went on Yahoo Finance yesterday afternoon. I was on Fox Business yesterday morning, and all of them asked me about DeepSeek. Still, and what does it mean? And it's
crazy.
like, and last night I got into this long diatribe with one of the anchors about, the 6 million number again. I'm like, God, I thought that had been disproven. Like,
It's,
there's at least $500 million of GPUs that were used to build V3. So even if they did something with, test time compute for the reasoning engine that was more efficient, they spent like probably somewhere between 500 million and 1 billion at least. And that's what we know
mm-hmm,
about. That's like the for
mm-hmm,
sure, not the stuff that went to Singapore and we don't have any idea where it ended
yeah,
up.
Yeah,
100%.
100%. I want to get your guys' thoughts. We got some pre-market earnings going on, and as well, we had some earnings last night that Shy, I know we want to talk about. Why don't we get into it? Axon,
There it is.
because I know they had a crazy double beat. So do you have any thoughts there? We were talking about it a little
I
bit
mean, I'm
backstage.
glad we're bringing up Axon because it's almost a similar story of how media can take something way out of hand. Axon has been, it's one of the better monopolies out there that's under a $50 billion market cap. They're essentially monetizing public safety. You guys all may know them as that body cameras on the cops is Axon technology, but really I know them as the cloud ecosystem around public safety where all the evidence is stored into a cloud and it's a really high barrier of entry for any competitor to get into. They essentially own the whole space. So the pullback was the market's overreaction to the Flock safety breakup, where it was one of the main partners is now becoming a new competitor. I do think that Axon didn't get blinded by this. Like they axed the uh, pun intended, axed that partnership. It was a calculated decision to cut ties with Flock before they leveraged their own partnership to make them even stronger. So I think the second that Flock started moving beyond their AI-driven surveillance and drone security and into potentially new competitor, Axon was like, "You're not going to piggyback on us in our ecosystem. We're cutting you off." But the market saw it. Oh, maybe they don't have a monopoly anymore. There's a new competing company. When that's not the case. It's not the case. It's a niche versus a monster ecosystem Axon has. And then yesterday, Axon delivered a blowout quarter. Like this was a no, like the revenue went up 34%. Their margin expansion was extraordinary, where the EPS crushed, coming at $2.08, beating estimates of $1.51. This is like one of those monster companies that valuation will never be cheap. It's very similar to you have to pay up for the quality. Intuitive Surgical has never been cheap, and you see that chart the past 10 years. Palantir, everyone knows about Palantir as that AI defense. There's a duopoly in the new age of defense. It's Axon and Palantir. Axon just doesn't have the retail army behind it, so a lot of people don't know about it, but it is a hidden gem that's brewing in the sidelines that's going to become a mega cap when public safety is going to be a necessity the way the world's heading towards. And there's a really interesting drone component to this where drones are going to be also more of a spotlight on monitoring society, and Axon's going to be feeling that. And their technology isn't just applicable towards police. It's applicable towards across multiple industries. And you're seeing the enterprise business start picking back up. International sales went up 50% sequentially. And I think the retail industry is going to start adopting cameras on their employees. It's a massive TAM, and that's why I say mankind is essentially the TAM for Axon Technologies.
Now that the Humane pin got bought out by HP, I mean, Axon can just do what Humane was doing. Hey, I do want to say though, Shay, you were talking about Axon, but this week there was also a Tempus, right? I mean, that was one you were super bullish on. Even Nancy Pelosi might have gotten one wrong. I don't know if that's possible. She usually reads out the numbers weeks in advance. So what happened over there? I'm sorry, I don't know if you covered this one in depth, but I did want to ask you because I know you've been a big Tempus bull, and I almost bought because of her. But I saw you got into it, and I saw she got into it. I'm like, well, I might do that whole Nancy's trades portfolio. Seems to work. But what do you think about that one? Because that one was supposed to be like, a total ripper, and it kind of fell flat, no?
Yeah, I mean, it definitely fell flat, but this isn't not a stock that you have to track quarterly. It's a long-term thematic that's going to happen in years. So, like, the miss obviously came in at an EBITDA loss at $8 million and really improved. It's still negative. Their guide was they just miss across the board, but really the sell-off doesn't change anything doesn't change the structural reality of what Tempus is trying to do, which is transform healthcare via AI. And I do think they're embedded, like their 140% net retention rate is indication to me that everything is fine under the hood. It ran up into a print where the run up was based on a narrative, like you said, Nancy buying the stock, and it wasn't based on fundamentals. Like it was tilted to disappoint in the near term because nothing in the business changed from 3 months ago, but the stock doubled. So the long-term thesis still remains intact for this name, but I do think there needed to be some profit taking probably that occurred from like the newer traders, people trading this name. But like I'm so confident if you want exposure to healthcare AI, this is the tier one play. And I know the industry really well in healthcare. it's a dinosaur of an industry. Dinosaur.
Here's a
It takes a
takeout
long
play,
time.
Shy. Takeout play. I say Oracle will buy Tempest at some point.
Oracle should. That
Just a
database play,
little.
$100.
This is unfounded. You know, we advise Oracle. This is not something I have any insight to. Just looking at what they've done with their business, how they've restructured the Cerner deal, their desire, and of course, you know, Microsoft's done some buying into that space as well. But like, Larry is obsessed with healthcare. I mean, he's like 80 going on 16. I mean, the guy's like lives his life in a hyperbaric chamber. I mean, he's done great for himself. But like, seriously, like if I was Oracle, that would be a perfect pickup for what they're trying to do.
I
At 9
agree.
billion
I hope
market cap,
Tempest doesn't sell off though. I hope
9
it's
billion
too early
market cap.
innings.
That's a rounding error
100%.
for Oracle.
Yeah, just wanted to remind the audience too, from the Axon earnings, you guys can check out the hosted interview with President of Axon, Josh Eisner. So just wanted to shout that out as well.
Nice.
Take advantage of that. But let's check out the SMC filing. Their 10K last night. Let's here's that interview. So there's that, yeah. But let's get that filing for the 10K up.
Sorry if I derailed that, guys. I just
Oh no, you're fine.
you showed the
Totally
whole
good.
earnings chart, and I'm like, there's like 7, 8 really interesting names over the last couple days.
Yeah, I wanted to get your guys' thoughts on this though. I'm not a big SMCI guy at all, but Shy wanted to see what you thought about them.
It's still a shitco, guys. It's
Yeah.
still a shitco. Like this is nothing changed. By shitco, I mean like long term. Like Daniel and I are very long term investors. Like we're buy and hold.
Yep.
There's nothing. This is a commodity of a business. Servers is what they do is a commodity. There's no advantage or moat, and you can track it by their gross margins. Their first mover advantage for years, they were 17, 18% gross margins. Now it's like 11 to 12%. That's because they have to undercut their pricing to stay competitive. And now it's just like catching a short squeeze because they just like follow they're not going to be delisted. Fine. If you want to be invested in a company because they're not going to get delisted, go for it. But there is no long-term bull case in this name. It's still part of the why bother.
Yeah, I think it's kind of funny though. They say, you know, the 10K was filed, no more bear case. I mean, furthermore, in the fact that there's no fraud, no restatements, and just delayed filing, there's a lot of companies that it comes out later. It doesn't mean that they weren't able to get something redone by their, you know. And listen, I want to be very clear. I'm not suggesting they've done anything. I'm just saying that whole thing was so suspicious to me. I mean, the whole situation. The entire way that all went down, the fact that a massive Big Five firm would not work with them, to me, those companies will take anyone's money. Mm-hmm. There was something that maybe another firm figured out how to work around. And Shy, your comments, I mean, look, GPUs are the rage. I mean, if you're a trader and you're looking at a 6 or 12-month horizon, there probably is a play here. I mean, just because there's going to be this surge of buying and demand, 325 billion of capex, not to mention Stargate, and not to mention France, and not to mention China. There's going to be a lot of servers built, but it's not a great business. I mean, 11% margins, and you've got everybody, you know, HPE, Dell, you know, Cisco's getting more into this space, and then you know all the neo cloud. I don't know. I think it's risky.
Yeah, and
Yeah, I don't like
and the
SMCI.
competitors you just mentioned, like they have much better customer service as well. Like there's the only benefit that that SMCI has had is just the
Price.
quickest.
They're
Pricing
fast
and
and they're
quickest.
cheap.
Yeah, exactly.
You know,
I think they're one of the best trading vehicles. I'll give them that. Like for options, they can be a great trading vehicle. They might be best in that area, but other than that, I don't want any part of it.
Well, when the VIX spikes, right? I mean, good traders make money on that. Like, you know,
Exactly.
I'm not like Shai said, I'm a long guy, but I play options to kind of pad the different phases in the market. And I always say my broker that I work with does all my trades for me because, you know, I'm not cool enough to use one of these platforms. I just don't have time. I'm like texting, do this. But like when volatility spikes, I'm like, we should do something here. Like I said yesterday, like I did 2015 puts on HIMS when it was down like 23% in the pre-market. I made some great premium on it. I'm like, that kind of stuff is like, that's where you make your bank. You got to do it when
Absolutely, it's
everybody's
opportunity, right? I mean, obviously it can be scary, especially like just you gotta switch around your sizing when VIX is up like that and volatility is heightened, obviously. But if you can do that and adapt with the environment, it can be so much better.
If you have a huge risk appetite,
Yeah.
and
I
you're
was gonna
super
say.
long, and and you've been through enough of those massive loss days to realize you always come back. I keep telling that to the audience. I hope the Daily Rip people realize that, because I know after the last 5 days, I'm sure a lot of you are out there pretty depressed.
Well, it's
You're on
facts.
the long side.
Go look at the market. It's on a yearly
Well, no,
chart,
Zoom out.
right? Bump it up.
Zoom out.
Zoom
literally,
out.
I was smiling all week with my ads. Like that's the kind of mentality you need to have. And like even Daniel, he was on like CNBC, Fox, Yahoo Finance all day yesterday. He still was like his energy was up there, and he was like, I'm going to capitalize on that. So there's no excuse for you like listeners out there where don't feed into the like FUD. When the VIX is at 20, usually that's a buying opportunity for me because that means there's fear in the market. It's typically oversold in the near term. If I'm a long-term bull, my higher conviction names, I'm gonna do some tinkering. That's literally as simple as that, and be a turtle with it.
Yeah, 100%. We got more earnings this week, so we got Lowe's going on right now. Their earnings call is actually happening right as we speak, but they had a double beat, looking pretty good on the charts right now. You guys got any thoughts on Lowe's, Shy? More of the retail sector? Obviously, like I feel like that's been catching a bid over the past few days with Home Depot as well. We did good on that. Shout out. We'll talk about that in a little bit, but yeah, what's your thoughts here?
It's not my lane clearly because I'm a growth investor, but I think it's interesting. Both of them are doing well, and the real estate stocks are suffering hard.
Mm-hmm.
And also, I think it's interesting. Like Robinhood, they announced they might be selling homes on their platform this week. So like, maybe
Bro,
that's
what are they
big
not gonna do? I mean,
no, but that might be a big tailwind for like I don't know those companies because like 0% commission is inevitable. It feels like now in that space, and there might be more volume and trading. I don't know, but
yeah.
Robin is just
I have
going
a
after
thesis
the,
for you on this one, just
Let's
because
hear
I
it.
agree. I'm with Shy. I'm not. This is not my lane, but I'm practicing for my hosting gig later today. Talking about things that aren't like my daily thing. So, like they say, like I think I saw a stat yesterday, like 70% of homeowners are in a mortgage under 6% right now, meaning that basically with rates kind of staying higher for longer, moving and mobility is not really an option for a lot of people, even if they want to move. And the pricing on houses really hasn't broken, even though we've had this kind of long, sort of tenuous period of time in real estate. People are doing more. I mean, that's good for Lowe's and Home Depot, because if people can't move, they want to upgrade. They're going to redo their bathrooms. They're going to upgrade
it's
their
like the
kitchen.
COVID
So
situation. Yeah, you're
it's
right.
a little bit of that. Like I think people are saying like, look, I can't move, but I might, do some upgrades around the house. I mean, that's, to me, like that would be kind of like, I'm not going to spend the 100 grand we've saved to put a down payment on a new house.
Mm-hmm.
I'm going to take a little bit of that money. I'm going to repaint the bedroom, put a deck
Yeah.
on the house, and that's all good for those companies.
Does make
At the
sense.
same time, I'm still going to kind of put a ZZZ snore, because I'd rather get back to tech stuff. I'm just kidding.
100%. No, yeah, there's like a time and a place, right? And I feel like
No,
you
it's
got to
not wrong.
capitalize on when it's there, and you got to have some leverage on it, or else it's not going to be as fun as you might want it to be. Not
There's
like
only,
tech.
There's only so many industrial revolutions, guys. Like we're in the
Yeah.
fourth one. Like come
Yeah.
on, like, we're not gonna focus on Home Depot and Lowe's.
I mean, somebody does,
Yeah.
like Buffett, By the way, I was looking at something about Buffett, like about all the companies he's rolled up and bought, and like how many of them are terrible performers. It's just a great reminder out there to everybody that you can build $1 trillion market cap. You only got to be right a couple of times throughout the whole process. Like it was like Palantir, like those of us that bought it, like I know it's been a rough week, so some people are probably like throwing food at the screen when I say Palantir right now, because I think Kramer said something, and that was sort of the end. It was like a 35% dip from there, but like, I mean, those of us that bought it like $8 or $10, it's like, this is generational. You just strap in and ride. And by the way, it might go back to 40. I'm serious. Like it could go back to 40.
Mm-hmm.
And if you're smart, you buy more. Like if you believe in it.
100%. 100%. Oh my God! If it
Shit,
goes back
I
to
love
40,
it.
I'll buy back the shares I sold at 70 or 80 bucks. That's as simple as that.
All day long.
Easily.
Good stuff. Yeah, we got obviously Nvidia earnings coming up tonight. That's going to be fun. Snow as well. Shy. Snow, that's your baby. What are you looking for? How are you feeling?
Back-to-back quarters where the earnings gods hates me. It's the most annoying thing in the world. But
Maybe
honestly,
they're on your side this time. You just got to think positivity when you go into that print.
Snow's a
Think
tricky
good
one.
thoughts.
I will say snow's a tricky one because we clearly got weak AI workloads from the cloud providers this cycle, and it was due to compute constraint, energy constraint. It wasn't due to AI demand. So like, I also think that we had some conservative near-term guides from a lot of players in the space due to the high-stakes poker game that Trump's playing, strong dollar, whatever it might be. They've been conservative. Datadog's guide was worrisome because that was the first software stock with a consumption model report this earnings. You can say Confluent, sure. Streaming data is such a niche. I wouldn't put Confluent in the same category of like a good read through on a Snowflake. But we've also had software names who've been lagging the past 2 years, kind of playing catch up on good enough reports this cycle if they show Gen AI flow. Monday.com was lagging before they spiked on 20% on a good print. Wasn't great. Confluence, same thing, 30% almost on good, not great. Atlassian, same thing, good, not great. But they're playing catch up compared to like the CrowdStrikes, Palantirs, Cloudflares, etc., who've been roaring for years. So Snowflake could be part of that camp where they play catch up. All they have to do is prove their margins stabilize. They've got enough compute necessary to fulfill their AI products. Because all of last year, that was the story of their deterioration on the margins. The new CEO had to acquire as much compute as possible to create these products because Frank Slootman was asleep at the wheel for AI. And now I'm hoping he got enough so margins are going to start expanding. At the same time, revenue reaccelerates because last quarter, I think it was 3 or 4% of the revenue was Gen AI related. So that proved to the market, oh, AI won't cannibalize them as a data warehouse company. Maybe there's an enterprise AI data platform angle. And that's why it bumped up. So if they can prove that it's more than 5% of the revenue this cycle, that's momentum and that begins a re-rating. So I'm hopeful for that, but I haven't been adding ahead of it because I've gotten so many conflicting reports this cycle from big tech and the software names on it's a coin flip on how the market's going to react to their print.
Yeah, so it's interesting. The enterprise applications market, and we track this pretty closely at Futurum, it's not growing very quickly. And this is really one of the big structural ironies of this whole AI boom. There isn't a bubble for AI infrastructure. That's nonsense. It's absolutely nonsense. DeepSeek's nonsense. Cowen's nonsense. Everything we've tried to be told that there'll be less infrastructure demand has been nonsense. But the software consumption, the conversion has been unimpressive so far. It really has not been impressive. And companies are really struggling with the business model. Meaning that like you have companies like Oracle, they're like, we're just going to bake Gen AI into all our software. We're not going to really sell it or make any incremental money. And then that kind of screws it up for like the co-pilots and Microsofts and other. And I think deep down, I think we all know that this whole Jevons paradox, that more AI will be consumed as we get more efficient and it becomes more easily available to people. I mean, we see it with LLMs, right? It's just become part of our lives. But the money's not. Like Anthropic's got an 80 billion val now, 250 on OpenAI, and they've like less than 5 billion of revenue between them. It is a weird phenomenon right now in this fourth industrial revolution, trying to figure out how all the infrastructure. So I think, like, are we going to end up with China ghost cities? Like we've built all the infrastructure and no one's used. I don't think. I mean, I'm a total tech bull and I'm an optimist. I believe it will be consumed. But it's not showing up in the metrics. It's not showing up in Snowflake's metrics. We got Salesforce going after the bell today. They're doing Agentforce, and I'm a bull on Salesforce. I actually really think it's a good company. It's got some challenges ahead of it with agentic and what's going to go on, but they were there first. But having said that, I mean, they've been growing single digits, or very low double digits for a long time. There's a structural issue, guys, right now between AI infrastructure build and AI software services consumption.
So I do think that baton being transferred off is going. Nobody knows the timeline on that, but I think it's safe to say that it's inevitable, almost. Like the crown jewels of this AI era is going to be had in the stage 2 component. It is. We're seeing signs of it with Palantir already. Like they're Nvidia is clearly the crown jewel, guys. Like don't overreact. Like they're the kingpin. But I'm saying besides Nvidia, like Palantir is clearly the crown jewel of this AI era so far.
But
that's
even they're
stage
like,
2.
but sure, could we have a little debate on Palantir just for the health of our audience here? So, by the way, I'm a huge Alex Karp fan. I love his interviews. Like, he's like my hero as a person. I love how honest and genuine he is and just straightforward. Like, I think that's what we need in the world. Having said that, like, I don't think anyone even understands how much of their revenue is really comprised of software versus advanced inner working security company that has all the neural networks into government and stuff. Like what I'm saying though is it's not like a Salesforce where they have like tons of SaaS. I mean, the Palantir revenue makeup is really interesting in terms of how much of it's software, how much of it is sort of custom consulting services. They only have they have less than 1,000 customers. I mean, it is a small, highly specialized, very impressive company. but it is not like a Snowflake. It is not like an Atlassian. It is not like a Salesforce. This is not like mass enterprise deployment with $30 or $100 a month.
Mm-hmm.
Their numbers are massive because of the consulting. You know, they're the Anduril. What Anduril is to drones is what Palantir is to like top secret clearance AI workloads and consulting.
No, you nailed it though. Like I will say, like that's why I call them the operating system of AI, because like they're not a software play. They're not, guys. Like that's why I hate when people compare them to Snowflake, because you cannot be so like off. They are complete businesses. They don't need the workforce for their clientele like the same way that Snowflake does. And I think that you have to know like there is hybrid of infrastructure and also software, but like the software is, it's just a weird, it's a new category they created themselves. And I don't love the lack of transparency they have on how much the per revenue per customer they get. There's no visibility in that. There's because they approach it with a white canvas approach. Because once you do AIP bootcamp, then they sign a deal, and it's up to them like how much they need their operating system into their infused in their enterprises. So like it's very interchangeable. It just changes. It's on the spectrum, but it's very hard to value a company when there isn't as much visibility as you would get on other software names in that space. Like we know exactly what's happening in Snowflake, Atlassian, even Cloudflare. Like they're being really layered with like the Workers AI. Like there's a lack of transparency on the Palantir side. And I want to side with is because they have a stupid amount of government clearance that they just you can't really have that visibility. And Carp is very protective of
It's a
his,
moat. It's a moat. It's a huge
moat.
moat. By the way, I like ServiceNow is, I think, the ultimate kind of TAM expansion play. Bill McDermott's a friend, someone I really respect, but just seeing his work and what he's been able to accomplish there, trades at a pretty big premium. But I mean, that is a company that, I mean, they're expanding into new markets. They're entering into CRM. They're entering, I mean, just watch out, everyone, on that particular one. I did want to just make a shout. Workday reported yesterday, and they've kind of, I wouldn't say they've been kind of quiet, but they crushed it. And I think they had a huge, I don't know what it's doing this morning, but they had a huge bounce after hours. It does still show that kind of specialty, like finance software, HR, like there is still a need for these sort of line of business specific, function specific enterprise software applications. Workday, yeah, you see that pre-market up $25, 10%.
Yeah, it's interesting to see some of these companies catching a bid when we see the market kind of roll over like we have over the last week or so. You know what I mean? You start to see the rotation into some of these other companies, and it's nice to see. Because don't get me wrong, I love tech making all-time highs all the time. It's beautiful, but like we've talked about, there's no volatility in the market when that's happening, right? It's just like it's so slow, and I love it for my long term, but for intraday trading and shorter term trades, it's definitely tough. So just love to see a little more of, I guess, I'll take this from Michael Mouse. He says a little more of a Christmas tree heat map, right? When we look at that heat map, it's a little more looking red and green rather than just flash and green to me. So I just think it's been more fun in terms of that, but definitely bringing us opportunity, right? Daniel, you talked about it. It's like on these good companies, on these dips, this is all opportunity. Look what happened 2 years ago. Right, like that dip in the market made millionaires, man. I mean, I was buying up that whole dip, trying to put everything I could into there, and I'm very happy with where we're sitting now, right? Because of that, and I think we're gonna go through the cycle again.
Aside,
That's the thing, right? A lot of people don't have that dry gunpowder sitting there when it's time to get involved, right?
That's what I've been preaching. Like have that dry powder right in silence for the past couple months. But Daniel, I do want to ask you this question for ServiceNow. I know they're trying to pivot towards consumption models. Like, how is that like working in the near term? Like, because you have to have a consumption model in the future agentic AI world. You just have to. And I think they made some commentary in the recent earnings on them, like kind of adjusting their org towards that future. Any visibility towards that?
Well, I mean, the core ITSM business is intact. Nothing's changing there. But like the Now platform and what they're doing with like digital workforce and experience, what they're doing with CRM. The whole way they're building their agent infrastructure, and of course that company's culture. And it's a weird phenomenon, but I've spent time inside, as I've gotten to know Bill and this team, the strength of that culture is like a force multiplier. And you just see the people love working there, and the energy there is so good. And Bill's one of the best salesmen in the world. I mean, he is a tremendous seller in terms of his vision.
Yeah, really good stuff. Well, the market is open now.
So
The day is
guys,
starting. We have
I
a
just
special
I
guest.
just
Wait,
I
what's
just
up?
did a big buy, and something's happening with AppLovin. They're down 15% pre-market, even more right now. So
Who?
I am AppLovin.
Oh
So
boy.
I
So you're taking advantage, huh? Well,
I oh, Fuzzy Panda short.
ooh, yeah,
Let's
we got our boy Adam from Exclusive Trading. He's gonna come in, share some charts with us, share some setups for the day. So let's get him in here.
Who's the fuzzy
Get
panda?
that going.
Yeah, I was like, that's crazy.
Adam, what's up, man? How we doing?
Good morning, guys.
Good
Happy
morning.
Wednesday. Happy Nvidia whole entire stock market earnings day, because that's what really matters today.
Right?
Today is the day the entire S&P 500 is reporting earnings. Let's get some energy. Let's get some excitement. It's a big day today. I'm very excited.
It is a big day. We got.
All right, so-
what do you got for us? I know we were
Yeah,
talking
yeah.
backstage
So-
in the morning. You kind of got a little bit of a bull case for the morning on the market, so I want to hear about it.
Bull case, a bear case. I got a whole breakdown for you guys in NVIDIA here. I'm sure a lot of you guys are really interested on what to do with NVIDIA, because obviously everyone's staring at it. The last 3 or 4 days, we've seen a pretty stark pullback in general in the market. I know we're all feeling it, especially if you guys are growth investors. I know Dana talked about it earlier. Yeah, we're feeling it, right? And now we're at this point, we're at a very interesting point. So we're seeing a little bit of de-risking pre-ER, which is causing the selling pressure here. At least that's how I'm reading it at this point in time. Yesterday, if you look at your daily chart on NVIDIA, you'll notice that we saw some exhaustion. So I have a cluster of support on NVIDIA from I've got 123.80, 124.53, and 125 as levels of key support for NVIDIA. Now be mindful, we also have the 200 MA at 126.19. Let me share my screen here with you guys. 1 second. I'll show you what I'm looking at here.
Yeah, no worries.
Let's pull that up for you. Where are we? Window. There we go. All right, so we got the lovely Weeble desktop here. But you got this nice cluster of support right down here that we got marked out here. We closed above that 200 MA. That's a big move. So seeing us wick down, test that support, and close above actually sets us up really nicely going into our ER here. Now, be mindful that we also closed above this 23.6% fib retracement on the daily chart as well. So looking at near term, this bounce here coming up a little bit makes a lot of sense. Now, let's zoom out just a little bit to our weekly and our monthly. Mainly, I want to look at our monthly here. I'm going to hide my drawings so you can see a bit. My concern, or at least the bear case of things, what I'm looking at here, is basically going back to October to today. And you can see all these wicks up here, signifying to me that people are obviously taking profit. We're starting to come out. People are realizing gains pretty aggressively, at least in this period of time. Being mindful of that, looking at specific resistances going into this ER, you want to look at these 3 levels right here on my chart: 134.22, 137.81, and most importantly, 141.36. So if you want a bull and a break line for the market for NVIDIA specifically, 125 is your bear line, so that breaks, we're going down, and 141.36, that breaks, we're going up. That's the way I'm reading this chart as it sits right now. Now consider that how the VIX is sitting. It's very interesting because yesterday we wicked up pretty high on the VIX. So we'll pull up the VIX chart real quick. Last 3 days, obviously volatility is expanding. We're seeing the market come down, so volatility is moving up. At the same time, notice that we have these higher wicks here coming up, and but closing lower. So it is indicative that the market could be signaling that volatility is getting a little bit weaker. We're still moving
Well, and
up
it
on
happens every
volatility, don't get me
time,
wrong.
right? We look
But-
back on
yeah,
the chart.
every
Look back
time-
every time, man.
Every time we get over, I have it marked out here at 2030 specifically, but when we get over that level, you can even see it wicked right here on 224. Getting above that level, it's very hard for the market to stay above there, with the exception of like COVID time. But above those 20s, the market doesn't want to be fearful. The market doesn't want that volatility. It wants to come out and wants to consolidate, relax. That's a good place to consider longs. Now, for me personally, if I'm going to play NVIDIA ER, which I'm waiting to decide on, right now you've got about a $12 to a $14 expected move based on yesterday's close on how the options are sitting right now. So for me personally, what I'd be interested in is a calendar spread. So what a calendar spread allows you to do is take a short position one way while realizing a longer position another way. Meaning, if I was to take advantage of a potential IV drop here on NVIDIA, I would consider selling puts but purchasing calls longer term out. What that would allow me to do is lower my cost basis on longer term calls while taking advantage of near term price action. I'm sorry, selling calls, buying longer calls. That would allow me to take the premium from the sold calls and actually discount the longer term calls so I can establish a long-term position, a leveraged long-term position on Nvidia longer term for a little bit cheaper to take advantage of the IV pump we are clearly having here. So that is kind of my whole synopsis on how Nvidia is going to go down today. If I had to pick a side, like I said, I'm going to be a 70-30 bull, meaning I'm 70% bullish just because of how the market's sitting, where we're sitting on the market, versus a 30% bear. Nvidia really tends to not disappoint. Anytime the market is sitting on the shoulders of one of these giant stocks, if you remember, like maybe 6 months ago, the market looks like it was going to go down and Apple was going to report earnings and Apple announced a buyback and the whole market went, yep, up. It just takes one thing, one catalyst in this fearful environment, and Nvidia, in my opinion, will be that catalyst. So that's why I'm sitting at a 70-30 bull bear on Nvidia going into close today.
100%. I mean, hard to bet against it. We've seen it time and time again, right? We've seen Nvidia come in and save the market time and time again. And, you know, I'm totally open to the fact that, like, you know, I've been just talking with my guys and stuff, and it's like, you know, market is different now for sure in this in this new year. The environment is definitely a bit different than what we've been trading the past year, right? But I mean, Nvidia has just been pretty much sideways and quiet. She hasn't made any real decisions this year so far. So I definitely think this is the start of it. And I'm with you. It's definitely hard to bet against. I kind of have a case for both sides. Like I'm not a big earnings guy. I'm not going to be taking any positions on earnings. But you know, I could see either way happening. At the end of the day, it's no matter what, it's just so difficult to bet against Nvidia, and that's why I'm not taking any positions, right? I might have speculative thoughts on like why we might go down, why we might rip it, but like at the end of the day, I don't know anything when it comes to the earnings, and it's like we could do anything here. But I would love to see Nvidia save the market once again because that's what we've seen time and time over and over again. So I wouldn't be surprised, but along with that, I wouldn't mind a dip either, right? Keep that volatility heightened in the market. I wouldn't mind that, but based on what you're saying, especially with VIX and that all lining up, I like your thoughts and your thesis on that because it does make a lot of sense.
I do want to highlight one more thing here. So this is the SMH. Yeah. So this is a semiconductor for all. I'm sorry, an ETF for all the semiconductors, or a large portion of semiconductors here. You can see that it's been sitting pretty sideways right now, but I want you to look at your daily chart and notice this dark blue line on my chart. This is a 200 MA. And it, ever since back in 2023, every time it's tested, it's wicked down for a day or two, it has bounced up. We tested it over and over and over and over and over. We had a little bad few days there where it still moved back up, but right now we are under that 200 MA. Now, what I want to say here is more for a bear case, actually, where in the event that, let's say Nvidia reports a nothing burger, which I think is unlikely, but let's just say like nothing happens either which way. If we see the SMH stays sub 40, this basically this POC right here, it's 245.06. We're going to see semiconductors probably go down for a pretty harsh ride. Now, with that being said, your bull catalyst and what you want to watch for on SMH here is going to be north of this 249.70. What I'm most interested in, because like Jordan said, you might be a trader out there who doesn't really want to bet on earnings, or you're not really experienced with spreads, maybe you don't want to do a calendar spread. What I would look for here is watching the SMH and looking at adjacent companies that work in the semiconductor industry, whether it's materials, whether they have AI or any other sort of thing where they would benefit off of a good Nvidia earnings report, and look for those opportunities that coincide with how Nvidia reports and how the SMH specifically looks. You'll probably find a few diamonds in the rough there.
Yeah, that's where that's where you can find a name that's going to run with Nvidia if it goes, but you're capturing maybe some option contracts that have not nearly the amount of risk that maybe Nvidia contracts have, or even if it's shares, right? Just a matter of being able to pick up a ticker that's a cheaper share price, but still going to capture that move. I fully agree. What's up?
Here's a fun one I was thinking of is like, so if Nvidia crushes it today, Dell reports tomorrow. Do you buy options into the Dell print tomorrow or something like that? Because obviously we saw what happened with Supermicro. It is really interesting, though. I'll say, Adam, I really like what you're doing with the charts. It's not a skill I have, but what I will say is probably most interesting is Nvidia's earnings the last few quarters, even though they've been great, the market has not actually responded all that favorably to it. And here's what I think we all have to really look out for is going to be the expected guide from the street is not the number that the street wants. The street wants something that's much bigger. And so over the last like 3 or 4 quarters, each quarter, its guide has been less above expectation. So they continue to pull back. So they're still guiding above expectation, but not as much over each of the last 2 or 3 quarters. If they don't guide up enough, that's a big ding on Blackwell. That's a big ding on sort of the momentum of AI. And I think the market could react really negatively to a great print if the guide, and that's been kind of the case with a lot of the mag names.
I have that thought in the back of my mind as well, to be honest. And like you say, we've kind of seen that on some names. But then again, it's like, oh, but it's Nvidia, right? It's like, how do you bet against Nvidia? But it's just, we're going to find out. We're going to fuck around and find out, aren't we? I mean,
I'm going to heavily agree with that sentiment. And to echo your sentiment, actually, if you look back at the last 2 earnings reports for Nvidia, they did close lower. So there, you do have a lot of what you're saying is true, because although this is the bastion of the future, this is where the market's going to go in the near term. Like, this is where the market's forward looking. This is exactly what it wants to do. Like, this is the leader. If it disappoints in any regard, if it's anything less than absolutely stellar, then it's going to more than likely come down. But with that being said, we're at this point of weakness in the general market where if there is, like Shay said before, if there is someone to save the day, it's going to be Nvidia, and this will be the catalyst to save the day.
Yeah, fully agree. 100%. Do you have any, I was just curious if you have any other names that you're looking at throughout the day, maybe for potential day trades or just setups in general across the board?
Yeah, I typically trade SPY pretty aggressively throughout the day.
Yeah, you're trading SPY options, I assume, right? Yeah.
Yeah, I trade SPY options pretty aggressively throughout the day. One name that I picked up yesterday, actually in a swing position, so I'll talk about a few swings for you guys to possibly consider.
Yeah.
Amazon. If you pull up your Amazon chart, which I could do for you here if you give me 1 second.
She on a nice dip, man.
Again. Yeah, that's what I was looking at.
Beautiful
so
dip.
if you want to look specifically at Amazon here, I'll look out on your daily chart. This is a pretty nice wick here. So we had an old gap here from 207.34 to 210.88, and that was an old gap. Filled it yesterday, wicked down, and came right back up. So there was a good, decent risk to reward there on Amazon, specifically to get in there. You have this cluster of support down here in the 200s essentially. So for me, I actually opened up some April 17th 225 calls, which are still up right now. I entered around 480-ish. They're now selling at 540. Because being mindful, whenever I look for a swing contract specifically, I want to look at what happened and how much it was the last 3 or 4 days ago to give me an idea of, even on the short term, if I'm trying to nail a bottom or a reversal, like with Amazon we're seeing. This contract 3 days ago was up near $10. So I'm picking it up at 480. We're talking about discount shopping from an options point of view. I'm getting it half off.
Yep.
So if price theoretically returns there pretty soon, I'm going to have 100% return. And I'm not always looking to bang 100%, but pretty good risk to reward. You're not too far out the money, at least in my opinion. You're $10 out the money. And again, coming back to this general area of this 225, I think it's very realistic these go in the money by April. And that's just my 2 cents on that. But Amazon, great one to look out for. Danny, you might like this one. This is one I've kept to myself a little bit. I shared it with the members in our community at Exclusive Trading, but Bumble. No one's talking about this name at all.
I've seen this a few times, man. I've seen it a few times. It's been, it's been interesting.
What I call raccoon trading. So I go into the trash and I find these names that are in the trash. They're recognizable names. They've got good brands. They're not.
I love it.
They're not in the gutter with financials necessarily, but they're really interesting names that could have some turnaround perspective. Bumble right now is selling at $549. Its all-time low is $480, so you could risk all-time low, so minor drawdown here, for potential at a turnaround story with this kind of stock. Keeping that in mind with Bumble specifically, what I'm looking for at this evaluation, currently trading at only 600 million market cap, is actually a buyout candidate from Match. Now keep that in mind. Take that off the table completely. Their CEO that introduced the company is coming back into the picture very soon, and they're getting rid of some loss leaders with their company. So they're really just focusing back on what makes their company a success in the first place. This company was $15 billion when it IPO'd, somewhere in that neighborhood. It is now trading at $600 million. So for me, down here, this is a fantastic risk to reward where I'm risking a drawdown of about 70 cents, where all-time highs, again, I'm not saying it's getting here, but this was at 84.80. This is a fantastic, in my opinion, risk to reward play on equity and on leap options if you like that kind of name. I think this is a buyout candidate in general, and I think Match.com would come in and swoop up their competition if they're allowed to.
Serious question though, like, I've been married for like 1,000 years, so like I never use dating apps. I'm so old. But like, is there any moat in this? Because that's my biggest concern is like, what are these, like, what kind of moat do they have? How are they like using AI to match? Like, because otherwise I just worry that this kind of stuff is so easy to, build a generative app that's going to help us match build the app.
Yeah.
That helps me find the perfect person to share my life with. It'll probably be like it'll be like the movie Her. It'll find me like a bot because it's like, that's the only person that could possibly tolerate you. But like, in serious, like, that's the only concern. Because I think you're right. I actually like to do the same thing. I mean, when a company gets destroyed, it's like, did anything change? If not, let's look at trading, But like, I don't get the whole dating app market. So I don't know if I can.
I agree. There isn't much of a moat. If another dating app wanted to go out there and do a dating app where the women contact the men first, there's not really anything stopping them from doing that. So I'll agree there really isn't much of a moat outside of the fact that you'd actually have to have the capital to start the company, obviously. So, but if Match wanted to make a competitor, they could. What I'm saying in terms, and this is the only terms of any kind of moat, they have brand recognition and people know the name.
True.
Yeah, you nailed that.
At a
Definitely.
discount at $600 million for Match at discount, even if they bought it for $1 billion, it's a massive discount for them to actually just have the brand recognition and something to add in their portfolio of dating apps. So that's the value for me. That's why I said here is a good risk to reward. Up at $10, maybe not so much, but here where you're risking, like I said, 60 cents to the downside, not bad.
Yeah, for sure.
Yeah, interesting stuff. Do you guys have any other thoughts for the market? Daniel, Shy?
I mean,
you
I
wanna
do.
share?
Dana, I want
Let's hear it,
to
Shy.
hear your perspective on this because remember I said AppLovin just got a short report. Minutes later, another short report from a different firm dropped on
that's-
AppLovin. So they're halted down now, down 18%. Do you think it's a coincidence or a coordinated attack? Like
They're
when
getting
something like that
Hindenburg,
occurs?
Hindenburg right now.
Is it?
I mean, look, what goes up, they say sometimes must come down. I mean, the run-up of AppLovin didn't make a ton of sense to me. I know you're pretty bullish on it. And did you buy this morning? Did you literally buy this morning?
I buy 1% right now, so that's why I'm watching it right now.
Okay.
I'm bullish because I'm bullish on ad tech. TTD though. This is my first time owning AppLovin.
Yeah, so this isn't an area I follow quite as closely, but what I will say is, and this probably goes to the trading side of this group. You and I are a bit of the longs. They start talking technicals and trading, and you and I start looking at our messages. I see us; we both do it. But the net effect is when something runs too far too fast. I think it's always a trading opportunity. I mean, like anyone that saw the Palantir thing, how quick it went up, the Hims Hers thing, like how quick that went up. Like, I think they're still good companies. I'll keep going back to that picture of everybody lining up to buy a stock at this high price and then nobody at the door when that price comes back down. Like, you look at this company, I mean, the only thing you got to worry about with these short reports, Shy, is fraud. Like, if these companies are actually like manipulating the market and fraud, I mean, Hindenburg had an impeccable record. Like, when they put something out, it was like 75, 80% right. To your question about coordinated, I mean, look, we all know that you can use the media, you can use sentiment to drive stock performance. I mean, we've seen it happen before. That's how these retail armies work. It can definitely be a force, just like the algorithms can be. I would say if it's a nothing burger, you'll probably be fine. But when there are more than one, it's kind of a smoke and fire thing.
Yeah, that's a little scary. That's a little scary for sure.
I will say, this is also a pretty big tailwind, guys, for Unity, who just launched an AppLovin competing product just a week ago.
Oh, she's just ripping right now off the open as well. Looking good so far.
AppLovin's demise could be a tailwind for Unity when they are a duopoly in the gaming engine space already. So it's not all ad tech. It's just a layer into their ecosystem where it's not. You can't say the same thing for AppLovin. So like, I don't know. I had an open slot because I had to close Jumia down, which was an awful position for me. And TTD showed cracks in their ad tech earnings last cycle. It's like I want ad tech exposure. Maybe a 1% AppLovin position will do it just fine. But yeah, that's. I mean, those
Here's your
numbers
ad
are hard
tech
to believe.
exposure, Shy. Buy Meta on this big sell-off.
Don't bring up Meta. Don't bring up Meta. That's the one I missed completely
Buy
because of
Meta.
Zuck. I'm so upset about that one.
Oh my gosh, that was that's a name that just doesn't stop running, does it? Oh,
Well, it did have a nice pullback. I mean, that 20-day
No, it
thing
did.
was incredible. I think I went on CNBC and I said it might be the most consequential company of our time right now.
It just
And
finally chilled out, you know. It for a minute there, I'm like, are we seriously just gonna just squeeze like this over the highs while everything else is getting a dip? And then finally coming in now, so starting to make a little more sense. But yeah, great show this morning, guys. I appreciate the whole audience tuning in. Adam, Shay, Daniel, appreciate you guys coming on the show as always. And yeah, everybody enjoy the day. Trade safe, and we'll see everybody bright and early in the morning. Make sure you guys are liking and subscribing on the Stock Tips channel. We'll see you later.